Women in Mining Day. So look, I would like just to take a moment to celebrate and acknowledge the great women of the New South Wales mining industry. I guess I start with New South Wales because in my spare time I'm chair of Women in Mining New South Wales, but also of course those great women working around the globe in mining. We've got some managing directors in the audience, and our women work through the whole industry. But of course, thank you very much. But look, also let's acknowledge our amazing event everything today, Kerry Stevenson, who is one of the great women in mining. So thank you, Kerry, for always putting on an amazing, For those of us who've been lucky enough to be here yesterday and last night, and of course today, it really is a fantastic conference and so beautifully timed. So in this session, our first speaker is in fact the amazing Jake Klein, who of course needs very little introduction. He's with Evolution Mining, and he will be having a conversation with the other amazing Kerry Stevenson. So please welcome Jake and Kerry to the stage for a conversation.
Thanks, Lucy.
Thank you.
Thanks,
Thank you.
Thanks, Lucy. Jake, here we are.
I have to say, I'm sure you've been called amazing a lot, but I haven't.
No, I haven't actually. I've hardly ever been called amazing, but thanks, Lucy. So here we are, the amazing you and I, in amazing times, I guess, in very volatile times. Jake, you and I have had conversations before in times when it wasn't quite as crazy as it is at the moment. We have a slide up at the moment, the winds of change, which I'll come to in a moment. But for those that don't know you, can we just do a very quick background of how long you've been in the industry? Because there is some history to this that I will bring up a little bit later.
That's, how long have I got? 29 minutes?
No, you've got about 1 minute.
I've been in the sector 25 years now, so veteran. An accidental miner. I'm an accountant, never expected to be in the mining industry, went on a journey in China, built Sino Gold and sold that in 2009, and then started Evolution effectively in 2010.
Which was just after the GFC. So we've seen some volatile times before. As we sit here with this audience today, it feels almost like the perfect storm with the feeling of inflation. The share market is under quite a lot of pressure. What are you seeing with this perfect storm when you're running a gold business?
You couldn't have held the conference at a worse time.
Thanks for coming, guys.
Because I came back from an overseas trip recently, and someone said, "How are you feeling?" We were out for a run, and I said, "Older, slower, and poorer."
Yeah.
I think we're in extraordinary times. The Fed has been printing money for the last decade. And I guess we shouldn't be surprised that there's a price to pay for what has effectively been free money for the last 10 years, since the 2008-2009 crash.
They didn't learn any lessons from that. They seem to have just kicked the can down the road and said, let's keep the party going.
Yeah, and it's been fun while it lasted. Free money was great.
Yep.
But now there is a time to pay for that. So, if you look, the Fed meetings, I think today or tomorrow, Australian time, there will be a rate hike. There's still, the jury's out. I guess, you'd have to say there's 3 scenarios I'd give it. The one is not good for gold, but not good for anyone. And that is that the Fed really goes hard on inflation as to what they're saying. Will 1% do it, 2%, 3%? Inflation's at 8 or 9%.
Exactly.
Someone said that the airport over here still can't hire enough people. We were staying in a hotel in the US that wouldn't clean our room because they couldn't get staff.
Wow.
So there is just a need, if people are employed, they're going to be working. I was at a restaurant last night, the restaurant was packed. So if people are employed, they're going to be spending money, and inflation's not going to come under control. That's scenario one. The Fed goes really hard, puts the whole world into a global recession, and overshoots in terms of constraining everything and making everything exorbitantly expensive. Scenario two is they go but tepidly. Great for gold because inflation doesn't come under control, but not really good for anyone else.
Yep.
And the third, and you'd have to give it a very small probability, is they create a soft landing and somehow the party gets back to normal and keeps going.
I'm sure you've had a lot of, more than just you and I chatting today to think about this. Jake, what do you think is the more likely out of the three? Do you think they're going to go hard with the interest rates?
I don't think they're going to be able to tame inflation.
No.
I think now is a great time to be getting exposed to gold. I know that that's any gold miner that's sitting up here is going to be saying that. But inflation is high. It's out of control. And if you look at how gold does perform as an inflation hedge, it does pretty well.
Absolutely does. Now, a moment ago, you also mentioned that you'd been in the US, you'd been at a conference, they didn't have enough people to clean the room. That's a shocker. What's sentiment like over in the US compared to Australia?
With regard to gold, or?
Well, just regard to how they're feeling about investing, what they're doing with their money, and with regard to gold.
So I was at the Bank of America Merrill Lynch conference in Miami.
Yep.
I'd have to say that the level of interest in gold was low. A lot of the active fund managers either had seen us in February at the BMO conference or just weren't really that interested. I think there are a number of things at play. One is gold hasn't been that interesting in the last couple of years. You've been better off in the future-facing metals. Now, maybe you're better off in gold. You know, the COVID is still an issue there, and people travelling before their summer holidays may not have been wanting to come there. But the rise of passive funds, there are fewer active fund managers around who are interested in gold, and also cryptos have had a big influence.
Yeah, I was going to ask you about crypto. I didn't know whether you wanted to go there, but there's a lot of money. We're talking trillions of dollars. It has been a bloodbath in the last few weeks. Do you think that that's now going to get some of that liquidity back into the gold market? Do you think that those people are suddenly saying, well, it is very specky and maybe we should go back to true money?
I hope so. But if you look at how cryptos have performed, Bitcoin, it's performed much more like a technology stock than it has a store of value. So if you look at gold, it's probably, 10% off its historic highs in US dollar terms. If you look at Bitcoin, it's 50% off its historic highs, or more, 60 to 70% now. So, which is a better store of value? So the argument that Bitcoin is a good store of value, I think, is diminished. Gold is the best store of value. Is there enough interest? We are a small sector, and we have lost some investors, and so how do we get relevance? I think is one of the biggest challenges for us.
I've got this slide up here, which I took from the presentation that you've recently done, Winds of Change, the 6 Ws. Can we just talk a little bit about the importance that you see of this, the winds of change, and how you see it? Yeah,
well, I think probably the most, well, not the most relevant one. I wanted to give people a sense as to what we're thinking about as a business. Clearly the most present and one is the cost of capital. Given the contraction of liquidity in the markets, I think we are officially in bear territory now. Then the reality is that it is going to cost people more money to raise money. Access to capital is going to be more difficult. We were very fortunate to issue an 8.5-year bond fixed rate at 3% in December. I think that would cost us probably 7 or 8% today.
Wow.
So cost of capital is massively higher. And I think that's something that the industry really needs to think about as some of the companies out here, and there's some really exciting companies I went past their booths, think about their next capital raising and where's that access to capital going to come. But it is going to be more expensive than it was a few weeks ago.
Let me stop you on that one for a moment, but as far as Evolution Mining is concerned, when you look at your cost of capital, you've planned for it well enough that you think that you'll be able to weather those strong headwinds, if you like.
Yeah, we see this as opportunity. We love to see motivated sellers. It's been the best access to some of our opportunities, and if there is anyone motivated to sell, please come and see me.
He'll be here all day.
That's the time. If you're in a cyclical industry, you want to do things which are counter-cyclical. There is no point doing things when everyone wants to do the same thing. And I think our modus operandi is always to acquire things which are counter-cyclical, hopefully where there's a motivated seller, and in almost every case there has been, and in a time where we really see value to be created. Just before we move on, Kerry, today is important, as Lucy mentioned. The woman in mining, it is an important day. It's an important era we're really in. The reality is that this is a sector that needs to be much more progressive and much more diverse. As my wife, who was with me in Miami, said at one of these cocktail functions in Miami at this conference, gee, you really are a group of white middle-aged men, which is true. There's a 20% participation rate in the sector, and we are missing so much of the potential workforce. So we need to make it a more attractive industry. We need to make it an industry that is free of prejudice, bullying, and all the things that came out in the Rio report. We should not confine it to just Rio. It's happening probably right across the industry, and if you speak to women in mining, they will say that they have experienced similar incidents to what was documented in the Rio report. So Rio did a great thing in putting it out there.
Absolutely, but I think it is a strong time for women. In fact, Jake, we had some young ladies from PLC Croydon, years 11 and 12 here yesterday, and they came in with a certain level of, I guess, skepticism for mining, and I think they left with a total change of mind of what the industry really is. So that was great for us.
It's a great industry.
It's a fantastic industry.
ESG is the other thing. We put it down as water. It is a reality that we are in an environment where ESG is becoming increasingly important to access capital. Shareholders like Fidelity, BlackRock, big institutions are saying that they won't invest in companies that don't have a pathway to net zero. Wow. We've committed to that. But it is going to come at a cost. It's another thing that I don't think is being talked about publicly at the moment, or it's in our papers all the time about the move to net zero and our commitments by 2030. But basically, the new government has to replace a piece of national infrastructure to make our grid renewable. I'm not sure they have a plan to do that at the moment, or a pathway, but that is going to be expensive. It's going to cost either taxpayers and or companies a lot of money, but the current cost of power that you're seeing is not going away.
Well, it's not going away, and I would like to know, I'm sure our audience would as well, this with the ESG, which has to be done, what sort of impact does that have on your business specifically?
Cost is the short answer. If you look at our power bills, they're going up because of the current crisis in New South Wales, particularly on the East Coast. But I think if you're replacing a grid, which has to happen, there's a cost to that, and renewable power is going to be more expensive than the current infrastructure. It's the right thing to do, and we're very supportive of it. But I think everyone in this audience needs to know that there is going to be a cost factor to that. It's necessary to access capital. It's what the public want. It's what investors want. But there is a cost to it.
Do you think we're rushing into it without a solid plan? It's just we're kind of saying we're going to go to net zero, and they haven't really looked at it from a bigger picture point of view. It's just like, well, we think this is the right thing to do. Let's do it, but don't really understand the impact that it's going to have across so many different sectors.
Well, if someone has a plan, they haven't shown it to us.
Yeah, exactly.
But look, if you take a company like Evolution, 73% of our emissions are Scope 2 emissions, which is basically grinding mills, and that.
Sorry, that wasn't you. That was
that needs power from the grid, and our best pathway to our commitment of a 30% reduction by 2030 is if we're able to access renewable power by then. The government's saying that they will have renewable power by then. I'm not convinced there is a clear pathway to that.
You've got, we've just come through quite a challenging time. Obviously, this is the first time we've all been back in person since 2019. We've had COVID, we've got ongoing COVID challenges. Again, in your business, the way people work and I guess some of the things that you've had to put in place, how much has that changed for Evolution?
It's changed more at a small group office than it has on sites. We still need people at work to drive trucks and run equipment. So, the vast majority of our workforce have not changed the way in which they work. We need people on sites. We need people in regional Australia and regional Canada. And that hasn't changed that much. There's been some change in the group office where we are providing flexible work arrangements.
There's talk about these electric trucks and driverless trucks. You talk about people and people driving trucks. Is evolution looking down that pathway of technology changing the way you do need, how many people you actually do need on site?
Yes, I mean there are electric vehicles now. So we have a few electric scoops or boggers, as they're called in Australia. The challenge in Australia is that you're basically charging the electric piece of equipment with coal-fired power. In Canada, it's quite different, where there's a lot of hydropower. Red Lake, our mine in Canada, only accounts for 7% of our emissions. So they largely do have a renewable grid now, which is really good. In terms of big trucks, like what we use at Cal, there is not yet a commercial truck available, 220-ton truck that's electric.
I'm sure some people here would like to know about your projects at the moment. You just mentioned Red Lake, which is up in Alaska. How's that coming along?
Not Alaska, that's that company, Northern Star.
There we go. Apologies, Jake.
That's all right.
How is Red Lake coming along? Where are you at with that?
So Red Lake we acquired in April 2020. We got the keys, so we're 2 years into this. For those of you who don't know, it's in Ontario. We got the keys basically when we were in lockdown, so we couldn't visit a site that we'd acquired for the first 18 months. So we've really been visiting continuously since about September last year, where our COO and head of discovery actually went through the 2-week quarantine, which now seems very draconian.
Yeah.
But they did. It's an amazing site. It's one of those iconic gold fields of the world. It started 50 years ago mining. It's got an endowment of about 50 million ounces. And if you want to take on a significant challenge and a project, go where the gold is. And there is a lot of gold. So we've got about 12 million ounces in resource, 3.5 million ounces in reserve. But the asset was pretty broken, tired, had been really undercapitalized by the previous owners, and it really is needing a reinvigoration. So this was a very, very high-grade mine, which is famous for its the high-grade zone, which made Goldcorp the world's most valuable gold company. Unfortunately, the high-grade zone ran out. And now the grade is kind of 5 to 7 grams a tonne,
which is still pretty good. Australian
standard, that is high grade. If we told the people at our team at Mungari that they were mining 5 grams, they'd be very happy. But at Red Lake, that is low grade. Yeah. And what we're doing is we're transforming it from an 800,000 tonne per annum operation into a 2 million tonne per annum operation, medium grade. So high grade 800,000 tonnes to 2 million tonnes per annum medium grade, and that's going to take us, a few years. We've said we're 12 months behind because of COVID, but we're getting there. The board was actually there a couple of weeks ago, and we all came away with the view that the endowment is worth the challenge.
I was just about to say, Jake, what did you, when you were looking at acquiring Red Lake, and as you said before, right in the middle of COVID, what made you think that your team, because it was very unloved and people couldn't make it work, the high grade was gone. What attracted you to it, and why did you think you could turn this around and make it a good asset?
So the most important thing was the call of Glenn Masterman, our head of discovery, who said, I believe there's going to be mining here in 20 years' time. And that, you want to go to an operation where there is a lot of gold and there's potential to discover new gold. So we've got a team of geologists on site who are excited as anything about the opportunity there. Yes, it's been explored a lot, but you may have noticed that Great Bear, which was acquired by Kinross for $1.4 billion, is in a different lithological structure to what the Red Lake deposits are in. And yet we have that lithological structure on our site, which has never been tested. So it's a geologist's dream. There's every type of structure and geology there. We've got a 7-kilometre strike length.
Right.
We've got 3 mills, and what was really required is really recapitalising the mine. So there'd been no development done, it had been high graded, and it had been unloved.
So where are you at with it now?
We've turned the corner. We're confident of its future. We think it will be a 300,000 ounce plus producer. It'll take a little bit of time. It'll take some money, but let me give you the equation. So we spent $375 million US buying it.
Yep.
We spent another $300 million consolidating the district by buying the adjacent ground. And we've probably got to spend $300 million to get it to 300,000 plus ounces with a 17 to 20 year mine life. Just as an analogy, Great Bear, which is probably a 4 to 5 million ounce deposit, it has not yet had a resource defined, was sold for $1.4 billion.
Okay.
Newcrest just bought Pretium for $2.8 billion, 300,000 ounces a year operation. So if we can convert our investment of $1 billion into $3 billion of value, that is value creation for shareholders.
Do you think people will be having a look at it now with the idea to acquiring it now that you've done the hard work? And would Evolution look at divesting it?
The hard work's not finished.
Not finished yet.
It's not at 300,000 ounces a year. We need to get it to there, and then then it will be a core asset of ours, undoubtedly.
Okay. Let's talk about Cal, which is back here in Australia. When you and I last spoke, we were talking about the underground and the development of the underground. If you could just give us an update on where you're at with Cal.
So again, let me just go back a little bit in history. We bought this in 2015 from Barrick. It was due to stop mining in 2020 and process stockpile material for 4 years and close in 2024, which is 2 years away. We've done a lot of exploration. We've done a lot of work there. We now think it has a mine life to 2040.
2040?
Yeah, it's already repaid its capital that we invested. And we're spending $380 million on building an underground mine there that will take production up over 300,000 ounces. So it's at around 230,000 ounces a year at the moment, and it will go to plus 300,000 ounces.
In terms of the cost, the all-in sustaining costs for an asset in Australia, are there pressures on that? We spoke before about the SG hurdles and the rising energy costs. Is that impacting Cal at all?
There are pressures. It would be not true of me to be able to say that there aren't cost pressures in the sector. I mean, people are scarce.
Yep.
Inflation. There's wage pressure on people, or inflationary pressure on wages. Skills shortages. Power costs are going up. Consumables are going up. Tires are going up.
Yeah.
So where's the list going to end? But I think what you want to be is in quality assets. Cal is, its all-in sustaining cost is around 1,200 Australian dollars an ounce.
Nice.
Yeah, that's where you want to be.
Absolutely.
So that goes back to our strategy of you want to be in a quality portfolio, and that's what we've done over time. We've upgraded our portfolio to a better quality portfolio, and we do need to talk about Ernest Henry at some point.
Funnily enough, I've got it right here in front of me, which is not gold, it's more copper. Copper is a fantastic asset to be in at the moment. Talk to us about Ernest Henry, because you've got full ownership now.
We do. So that was an asset we bought in 2016. We bought 50% equivalent of it from Glencore. Glencore were a motivated seller, as I should say Barrick were a motivated seller, as was Newmont when they sold us Red Lake. For different reasons. But at that time, Glencore's price was, I think, 70p. It's now $4.80. Or £4.80. They really needed to raise some money. And one of the ways which we could do that is say we'd buy all the gold from Ernest Henry, 30% of the copper, and we'll give you $880 million up front. Since doing that deal, which we described as an economic interest, I think we've got $1.3 billion back. And it still has at least 5 more years in reserves and another 6 years, or we believe is an extension to the mine life and potential beyond that. So when Glencore rang us in July last year and said, do you want to buy the rest? We're making a strategic decision to sell our copper assets. We were like 30 seconds, yes, please. We paid $1 billion for the balance of it in December. That's when we did the debt raise. We didn't raise any equity. I think in the first quarter, we generated $175 million of cash from the asset. And I think on an annualized basis, it'll be kind of $120, $130 million a quarter, worth a 10-year plus mine life.
Do you think you bought well with taking the rest of that asset?
I know we bought well.
You know you bought well.
Yeah.
Yeah, I like that. You know you bought well.
That's only, you only get lucky a few times.
Right at the start of our conversation, Jake, you said that now is a good time to be looking at other opportunities as well. Mm-hmm. Do you think you've got enough on your plate with your current asset and current portfolio, or is there more? Is there more out there that you're going to be looking at?
Look, we've under-delivered in the last 12 to 18 months. Red Lake has taken longer. It's under-delivered this year relative to investor expectations. Absolutely. And our expectations. We know we've got to get runs on the board over there before we have the credibility and the currency to really go out aggressively and do some interesting deals. We just did $1 billion deal, which is our biggest deal we've done. Never say never, but right at the moment, I think hunkering down and doing what we said we'd do and delivering that is probably the best thing for us.
Do you think the market in general fully understands the evolution strategy going forward? Because it's been a tough time. Red Lake, perhaps people don't fully understand where you're going with that. How would you address some of those concerns?
Deliver. That's all we've got to do. We've got to demonstrate that Red Lake was a good buy. It's kind of been bundled into this category of Australian companies that have gone offshore and are struggling.
Yeah.
And our North American counterparts are doing nothing to try and diminish that view that the Australians were dumb going in and buying these lousy assets which they'd looked at and didn't like. So I think we've just got to demonstrate that we bought well. I believe we can. It's difficult in an industry where you have quarterly reporting and investors want kind of continual up-to-date. This is a 5-year turnaround. We're 2 years into a 5-year turnaround.
Yep.
It's difficult to show exact progress on a quarterly basis, but I've said we are 12 months behind where we should have been. We were overly optimistic as to what we could do initially. We have not diminished our belief that this is a really great asset to own, but we need to deliver it.
I'm going to come back to you in a moment, but I'm just going to throw it out there. We've got a couple of minutes left. If you do have a question for Jake, pop your hand in the air, because I love making these more
There's
interactive.
Keith. He'll have a question.
Keith
Three
is always
parts.
3 parts. If we could get a microphone. Have I got any volunteers in the room at the moment? No, but my sound guy. All right, just a gentleman right in here. Eduardo, if you just bring it. Sorry about that. We're recording as well. We've got live stream going, Keith, so we'll send you the microphone. Thanks, Eduardo.
So, Jake, just a straightforward two-part question.
Only 2 parts.
So, what year do you expect to hit or expect to exceed 300,000 ounces a year in Cal and in Red Lake?
So what you want to know is when are you going to get to 300,000 for Red Lake and for Cal?
Correct.
So we'll be within 10% of 300,000 ounces at Cal in this next financial year. And at Red Lake, I think it's probably 4 or 5 years away. So FY27.
So therefore, for Red Lake, when are we going to see 200,000 ounces?
200,000 ounces. So we've said publicly that we want to deliver 40,000 ounces this quarter. Then we want to stabilise it at 40,000 ounces per quarter for the next few quarters, the next 12 months. And then we'll go from that base on to 200,000 ounces. So we're probably about 18 months away.
Thanks, Jake.
Any other questions out there? Because otherwise I'm going to keep going. Jake, lots of investors here. Some of them are first-time investors. They've come to this conference going, well, I've heard about gold and I'm not quite sure what I should be doing. What would you say to them about where evolution is now and why potentially what work you're doing in the future, the benefit for shareholders going forward?
Yeah, I think you've got to look at companies from are they getting a return on capital? Are they investing smartly? Growth for growth's sake doesn't work. So we're a big believer in quality of assets. We've paid 18 consecutive dividends.
You have.
And that's delivered $1 billion back to investors over time. Gold shouldn't be treated as anything other than a normal business. Yes, you should make super profits at a time when the gold price is $2,500+ an ounce, which it is today. But for a more normalised gold price, we should be able to make good returns on capital. And I think that's what evolution has demonstrated over time. You can't invest in a gold company where the only thing going for it is a rise in the gold price.
Absolutely. No.
To get that option value to gold. You want a company that's delivering cash flow, delivering dividends, and you get that option.
Well, Jake, it's been an absolute pleasure having you here to have a chat with us today. And also, I just want to make mention that Jake has been supporting the Australian Gold Conference since its inception. So could you please thank him for his time today and also for his support of the event.
Thanks, Gary. Thanks a lot.